Hello and welcome to today's video. Today we're going to be discussing all things farming and agricultural. It's been quite a change over the last year or so in the world of capital taxes, and in particular the agriculture and the farming sector has been impacted significantly. So with that in mind, I can welcome two of our experts in this field. We have Tina Bishop, who's one of our tax directors here in Edinburgh, and we've got Will Bleasdale, who's one of our directors in our wealth management business. So good afternoon.
Hi, Donald.
So Tina, just take me back to the taxation of farmers, if we want to call it that.
Sure.
And in terms of their inheritance tax exposure. So just give me a little bit of the history and the background there.
So prior to the rules that were announced in the budget, we were looking at 100% reliefs on agricultural property, assuming essentially it could be brought back in hand within 2 years, and for business property 100% relief as well, and that was limitless essentially. In the changes announced in the October budget last year, we saw that a restriction will be put on place on the amount of relief that can be obtainable at 100%. And that limit is now £1 million. Right. Anything in excess of that will only receive 50% relief.
Wow, so it's a significant change, because you certainly it's not an area I know that well, but you definitely hear of generational families within farming, and the tax regime up till now has supported that passing of the farm down by generation.
Yes. Yeah, so we've not really farmers have not had such concern in looking at IHT planning. Prior to these announcements, the planning would have been keep hold of the farm, because essentially on death, your assets are uplifted to market value. The beneficiary receives those assets at market value, so we have an uplift in the base cost. And if there's no IHT payable, then that uplift in the base cost was the benefit of retaining the asset. Now, with IHT payable, that uplift in base cost isn't necessarily as valuable.
Yeah, so quite concerning, Will. I mean, you act for a number of farmers, so you finding there's some concerns out there when you're speaking to them?
Yeah, but certainly an anxiety, because what we'll all know is there's a lot of farmers out there who are quite asset rich, lots of land, machinery, animals, but actually when it comes to paying a large inheritance tax bill, there may not be cash readily available. Yeah. So the question's been raised of if dad dies and leaves the farm to us, who's picking up the tab? Yeah,
exactly. So because you just can't suddenly raise money or a mortgage on a farm to the tune of the inheritance tax bill as well. And that cash poor and asset rich, I was shocked when I saw some of the yields in some of the farms in terms of how much a farmer actually makes for the effort they put in a large amount of land as well. So what are you doing in terms of in the wealth management side of things? Is there planning that you're talking to your clients about that are in this farming world?
Absolutely, and for a lot of these farmers, it's quite a new concept to talk about inheritance tax, as you said, because previously it wasn't a concern. So the main thing that we're looking at now is in life insurance. Yeah, it is not fit for all clients, because some of them will be unfortunately too old or too ill to get life cover, but particularly for young ones or downward generations, what they're able to do is take out life cover that doesn't get rid of the inheritance tax liability, but at least means that if they pass away and there's a tax bill to pay, there's something in place to pay the bill. Yeah. And that can take a few different flavours. So for some clients, we're taking out what's known a whole of life policy, and as long as you keep paying the premiums, as it sounds, that will run for the entirety of your life. And that can be a great solution. Can be expensive, because ultimately it will always pay out on death as long as you keep paying the premiums. So for some clients, they're opting to do what's called a term assurance, which is where you pay for life cover for a fixed period of time. And for example, I've got a family who are taking up 20 years of life cover, and obviously if they die after 20 years, there's going to be no cover in place, but the plan is it gives them 20 years of planning time. 20 years to hope for a change in government and a change in legislation, 20 years to gift away assets to the next generation, and know that if they pass away and the gift fails and there's still inheritance tax to pay, at least again, there's cover in place to cover the liability. Yeah.
So Will mentioned gifting there. Explain how that works.
So essentially, you can make a gift in lifetime directly to an individual, and that's a potentially exempt transfer. So no IHT at the date of transfer, but there can be CGT consequences that we need to consider. Or you can make a gift into a trust, and that's what we call a chargeable lifetime transfer, and that can attract lifetime IHT rates. But with business property relief still being available until April 2026, then there's still a window where we can get assets into trust without this lifetime IHT charge.
Yeah. So it's really engaging with your tax advisor and your wealth manager as well to really see what options there are there. So it's gifting either to an individual, subject to capital gains, trusts the same.
Yes, subject to capital gains, but we can, holdover reliefs for CGT purposes are available when you pass to both individuals and trusts. But what we see with farming clients, it's not just business assets that are form part of the business. We have investment assets such as furnished holiday lets, some cottages, and those assets can attract CGT on a direct gift to individuals, whereas when we're transferring into trust, the relief is more wide-ranging, and we can have it on investment assets as well, which is why we quite often look at trusts as part of the planning. Yeah,
I mean, well, I've seen that, the diversity of the business in farming. We talked about the low yield there. So our Airbnb, holiday lets, farm shop, everything else like that, shoots and everything, but then that potentially taints the agricultural nature of the property as well. So is that something you're seeing in your client base?
Absolutely.
The diversification of the farming?
And it's sometimes not just about the farm itself, it's also how the farm's being held.
Yeah.
So we've got clients who are holding farm property and things that would qualify for agriculture relief inside things like pension, so like SAS or SIP, which would have made sense before the changes in the budget because pensions were outside of your state for inheritance tax. But actually from 2027, pensions will form part of a taxable estate. And so now farm assets held in the SIP are going to be taxed at 40%, rather they would have been taxed at 20% if they were held personally. So it's just mean that clients who had, I say 2 years ago, great planning in place, it all needs to be reviewed and perhaps we rejigged a little bit.
Yeah. So Tina, is it Jeremy Clarkson to blame for this, or is it just a wider attack on farmers? What's the
it seems to be a wider attack on farmers and other businesses as well, just to bring more IHT into the government coffers.
Yeah, exactly. So I mean, well, that's something that I think hits the headlines in a big way. Have you seen any difference in outlook in terms of arable versus dairy versus fruit farmers or anything like that when you're talking to them?
No, I think the consensus is they're all pretty upset.
Yes.
And they're all getting hit these tax bills and they're all having to engage with professionals that they otherwise wouldn't have dealt with, and it's just, I think for the next period it's just managing that. There's we can't get into crystal ball time, but there is a hope that future government may change the policy. So at least for the time being, it's putting protections in place to make sure that people aren't impacted in the short term.
It's difficulty for you, Tina, in terms of the planning, is the uncertainty. It'd be quite nice if that's the cards were dealt with, but there's been all sorts of rumours about U-turns and that, and the uncertainty then. Do I go for the planning or not?
There's obviously lots of matters released in the press of what may come. And as we say, we can only deal with what we know is to come. I'm not sure there'll be wholesale changes to the IHT position given the massive changes that were introduced last year. And with all tax planning, we always say, it's what you want to do. You don't let the tax dictate what you want to do. You need to look at the plan in the whole, and the tax may be the benefit, but it shouldn't be the driver for any planning.
Yeah. Well, final word, what would you say to some of our farming clients out there?
I think get in touch and have a formal review of your situation. A lot of valuations of farms are very out of date. I think getting in touch, having a valuation, understanding what the lay of the land is just now, and then speaking to people like myself and Tina to work out what the options are. For the younger clients, it may be taking out protection, and for perhaps people who that's not an option, looking at perhaps more aggressive gifting strategies to get ahead of a tax bill.
Yeah. Tina, final words?
Yeah, we're certainly looking at making sure we can maximise reliefs over the individuals when we've got partners, making sure each partner is going to have £1 million worth of, at least £1 million worth of value, looking at whether there should be any transfers. And I think when it comes to farming businesses, it's quite complex as to where titles are held, where it's recorded in the accounts. It's not always, it's not always the same. The legals aren't always matching what the accounts they say, and we need to get those right before we proceed with any planning. So it's really, it can be time consuming, but it's really important to figure that out and know where assets should be placed and how to transfer them or when to transfer them. So,
Tina, well, that's been great, and especially in such level of uncertainty that's in this world as well, and also the variability in farming itself, because you're dealing with biology and the nature and the elements, in these businesses too. So overlaying that with some inheritance tax complexity, you mentioned some land complexities as well, and then you never know, there might be even a development play in here as well, because there's a lot of land that's potentially for development. So thanks very much for joining us today, really appreciate that. And again, that's just another way that we've seen that Azets has got such a deep expertise, not just in terms of our technical service line specialisms, and with Tina on tax and Will on wealth management, but that deep expertise in dealing with a lot of a particular sector. And I know as Azets, we look after about 900 farmers throughout the UK, every part of the UK that has significant agriculture. We are the advisor of choice, so that could be from the vineyards of Kent right up to the fruit farms of Angus and everything in between. So thanks for watching today.